Greetings, everybody. Good morning or sort of good afternoon to people here in New York. I'm Rob Cox, the global editor of Breaking Views, Reuters financial commentary arm. I am joined by my colleague, Jen Saba, here from our headquarters in Times Square for the first time since, I don't know, the before times. Hi, Jen.
Hello.
We are super excited to present this very special Newsmaker today with Barry Diller. Hello, Barry. How are you?
Hello to you all. I'm okay, thank you.
Good. Barry is not someone who needs a lot of introduction, but I'll give it very quickly. He's the chairman and senior executive of IAC. He's been involved in companies that have become, in many respects, household names, including Expedia, Match, MGM Resorts, and now Little Island, a new type of public space in New York City, which I was craning my neck to see if I could see from our office here, but I'll try to get to in the next couple of days. All of this gives Barry an incredible...
This meeting is being recorded.
...on travel, dating, gaming, entertainment, all that stuff. I'm going to hand the mic over to Jen to talk to Barry. But before I do that, one quick housekeeping note. If you want to send us questions to pose at the end of the interview, you can do so using the little chat box that you can see on the right hand of your screen. Over to you, Jen.
All right. Well, thank you, Rob. Hello, Barry. Welcome. I'm very excited that you're here. I want to, start with Little Island. Congratulations. That just opened, last month. It was years in the making. You and your family foundation spent millions of dollars on it. Why? I mean, it's beautiful, but why did you were in it for the long haul. Why?
Well,
what inspired you?
It was really, as these things go, particularly things that I'm ever involved with, it did not start out wholly conceptualized. It started out with basically a simple idea, which was a pier was falling apart. They asked if I'd be interested in rebuilding it. And I said, well, I don't really want to build a pier that's rectangular, that was built for boats on either side, because that's no longer what these piers are for. And I said, well, if we could be imaginative and ambitious and not have to be in that footprint, that rectilinear footprint, let me think about that. And that sparked several things. First, I love public spaces and public parks. We were very involved in rebuilding the High Line. And I also thought that there was really nothing in New York that was on the water and had the ambition to be iconic, and that
because it kind of floats above the Hudson, right? It's really
it's an island,
nothing like it.
So that just started a process, and then, like many things happen, process begets process, and brick and other concrete and other forms that get thrown at you, like lawsuits from people who worry about the American eel and how much shade it is not getting. To which I said, well, the river's long. Can't the eel move a few blocks north for sun? But we went through, it just was a long, almost 10-year process. But I think it's hard for us to remember pain that's been in the past. I've kind of forgotten all that stuff and forgotten it, because as I walk on it and I see how happy it's making people, and how it really is crossing that bridge. It is going from the city and stimulus of the city to a pastoral place for, just wandering around, lying around, being entertained. We're starting performances in our 3 performance spaces next week, and we'll do over 500 between June and September.
And what are kind of performances like? Do you envision this for
Everything.
Up and coming artists or big time names?
No, it's everything. It is everything. It is every discipline, from comedy to ballet to spoken word to dance to everything, and a lot of excuse me, a lot of new artists and established artists. We are not doing. I do not want us to be a kind of stop on a tour. I don't want us to. That's not the purpose of this. for, let's call it, big superstar acts that tour, so to speak, and we'd just be a stop. I want it to be much, much, so to speak, not a little looser is a word, but more whimsical than a whole big production thing. We might do a big concert here and there with a big name, but that's not the purpose.
So you're committing $120 million at your family foundation to keep this.
Gee, thank you.
To keep thank you to keep this going.
No. First of all, you're shy by about 200 million.
Oh, okay. So you're committed. You're committing a lot. So at some point, though, this is like, how do you...
And we're just lucky that we have resources. And a lot of people say, well, why are you doing this in this particular place? Couldn't you do it someplace else? Or couldn't? We're not obviously curing a disease, but it is where it is because the pier we're replacing was falling down. I didn't ask it to be anyplace else. So we're just lucky we can do it and have the resources to do it. And the return is really at least so far, I don't know, almost 100,000 people who've been across it.
Wow, that's amazing. Yeah. So I mean, this is a good way to kind of segue into the reopening, right, in New York City. I mean,
yes.
We're here in Times Square, and it feels like a weekend here. There's not a lot going on. But when I was down there, there was a lot of bustle and a lot of people, and it looked like a lot of tourists. I mean, how do you envision New York City coming back? And
it's going to come back with a bang. Big.
Think it's going to?
Hopefully not an exhaust bang, but I mean, it has already started. I've seen, by the way, Times Square in the last, as against 6 months ago, where you could shoot a cannon straight through and not hit anybody. I saw huge crowds and just wandering around the whole square, et cetera. By the summer, presuming there's no exogenous something or some new strain or something terrible happens to us, the city is going to be fully back. And by fall, when Broadway comes and international tourism, which now is, because of the European being so scattershot in terms of being able to go to places and not have to hibernate or restrictions on international travel, all of which I think will fall through the summer. New York will be all the things of people saying, of which people said, okay, let's go to Florida. We pay less taxes. Do
you think that's overstated? I mean,
well, it's in a very tiny band of people in mostly financial markets who have left New York for Florida, or for not so much for Nevada, but for Wyoming, let's say. But of those, it's relatively, first of all, it's small numerically and isolated. And those people didn't really have, I think, real connections to the city. Mm. They really didn't participate in city life to the extent that I think the people who seem to care about New York, not at the higher end of income and wealth and whatever, they certainly travel a lot, but their emotions and hearts and things are for the city, and I think they'll be supportive of it. At least as I have seen so far, that support is, when it's tested, which is always nice to test things because then you find out. But when it's tested, the reaction is just great. Meaning, people are saying, "No, I love the city. What can I do to help?" And all of that, I think, is starting to stream people back, let's call it. Mm.
Well, I mean, now that we have the city kind of as a topic here, I mean, I'm just going to turn a little bit to the mayoral race. I mean, are you backing anybody? Do you have your eye on anybody to lead the city going forward?
A few of them. I don't, I've paid some attention to it. I've been otherwise occupied, but uh, I I haven't a clue what's going to happen. I suspect it might be surprising. The quote front runners, I'm not so sure.
Well, there's so many candidates.
There are a lot.
Yeah, it's like, yeah, a lot of candidates. So let's kind of turn more broadly then to just kind of reopening, because you have kind of approach in so many different sectors, from travel to dating, streaming media. Let's start with dating. Like, where do you see things post-pandemic, and what's life going to look like?
It doesn't surprise me at all. I think it's kind of to me at least, it's been predictable for almost 15 years, which is that technology has given us a better way to do something that we did fairly proverbially for 100 years or so. I mean, dating didn't really exist until the beginning of the 20th century. And what this is just technologically fed. It's not the only way, but for those who grew up in a period where you went to places to meet people, whether they were parties or bars or whatever, and it was the actual chances of across a room, the proverbial West Side Story across a gymnasium, of you seeing someone, they seeing you, and you locking on, and that's it. The odds aren't great for that. But with online dating, it's just a better system, and it keeps getting better because the technology, of course, keeps getting. That was what created Tinder, was technology, and those tools just get better.
Well, and just sort of like that is kind of turning to IAC, right? So we'll talk about Vimeo, which just spun out. That's your 11th spin out for IAC. And so the model, I mean, it's really an unusual
anti-conglomerate.
Yeah, it's an unusual model in the sense that you're sort of a VC, you're sort of an investor, how do you describe IAC? Like, how do you describe it? Like, who do you consider your competitors?
Which is, it is a unique business model, and as I said, like everything in my life, it did not grow out of a central idea. It evolved, and what happened is, as we began to invest and operate more than one company, and we were up to many companies. And I began to feel that when a company got to be a sufficient size, it really ought to be independent, that was a better structure for its management primarily. I thought first, it's better for its management. It's then better for its shareholders. It is a situation where, rather than being part of a conglomerate or part of a multi-business business, standing on your own is a healthier thing than being one of many. And so we started that, and essentially we've kept going, which is, obviously we're a multi-business business, so that is conglomeration. But we are also the anti-conglomerate in that when companies get to be a sufficient size, we spin them out to our shareholders. And we've done that 11 times. I hope we'll do it, double that in the next 5 years. But that is a unique model, and it's not for everyone, obviously. The thing is, actually, I think thankfully, it seems to be for no one other than us, which I kind of like.
Yeah.
Maybe because it's perceived by others to be a dumb concept or whatever. But I think as a business model, the more experience we have with it, the more I embrace it.
Can I just follow up on that? I'm curious. It is interesting. You call it a conglomerate, of course, a conglomerate that then spins out these businesses. Now, the sort of disparagement of conglomerates in the markets is you get a conglomerate discount. So you trade and IAC trades at a discount to the sum of the parts. However, if one believed that over time those parts would come into my hands as pure spin-off, then in theory it should narrow that discount.
Interestingly, it has over the years. At a certain point, I mean, we do track that discount, and I won't be exactly accurate on the percentages, but I think at one point we thought we were way in the 30% discount, and recently that has narrowed as people have, I think, more understood the model and more said, yes, well, you really ought to do kind of some of the parts here to at least some extent, and value the IAC security accordingly. But we're, frankly, I'm kind of neutral about it. I don't really care about at any given point the discount, because it allows us to repurchase our own shares if we wish. It allows for greater options and all of that, and eventually it'll work out. Since I don't.
Yeah, it's just interesting that no one. I think it's funny you say that, Barry. Like, it's funny that other people haven't recognized the value in it to the extent that you have 11 spinoffs, for instance, and you said you'll do double that in the next 5 years.
No, this is not a prediction. I'm saying I hope, but I could also triple.
Yeah, what's the downside to it? What would be?
The truth is that this is a debate. We have endless debates in our company, which we kind of prize. But I don't think there is. Again, there's no downside to it if, after doing this process for a while, your rhythm gets engaged in it, and it becomes your kind of accepted rhythm of functioning, meaning what the model is, and it's very clear to those relatively few people in our company. Doesn't matter whether it's clear to anyone else. It doesn't have, to me, I mean, the only downside would be, we do not build companies that we think, or anybody would think, deserve to be independent or have any value, in which case the whole thing would collapse. And that is always our big worry. We are in the endless what's next business.
So how do you scour for ideas? I mean, that's particularly, there's so much competition, right? Like, now you have SPACs, you have private equity. Blackstone invested in Bumble. I mean, how do you keep ahead of that, and where do you find your ideas, and like, what are the sectors that are on your radar right now?
Well, everything, anything that is virtual, to a large extent virtual, although we contradicted ourselves with our purchase of MGM Resorts, an interest in MGM Resorts, which is has a future virtually in terms of online, but certainly has a physical footprint. But we range everywhere we can. I mean, the only way you can perpetuate what we particularly do, because we are not one business, which I'll take it, the other business of which I have direct responsibility, is Expedia, which is clearly in the travel business and doesn't range outside of the travel business, nor should it. So it makes iteration within kind of obvious. But for us, unless we forage for ideas as to what is a good idea, which is what we're trained to try and ferret out, we have no future. And so it is not sector-led. It's not by anything other than what instinctively sounds like a good idea. That you can't get anywhere with us, at least until you can pass that first test. Beyond then, there are other tests you apply to it.
So let me ask about the MGM thing, because it is unusual, and it was not something that IAC, it's not the quote unquote IAC way. And it was a significant investment, right?
Yep.
About $1 billion for about a 12% stake. And yes. and it's in your letter, you were basically saying that it's because you see the opportunity for online gambling.
We definitely see that.
But why MGM? Why not? I mean, there's DraftKings. There are pure play online companies.
Because look, what happened again, our process is what it is, which is we started reviewing things during the pandemic. We do it all the time, but in the pandemic, we said, okay, very many things are stopped right now. Let us turn our attention. We have too much capital in reserve. We don't want to squander it, obviously. We're happy to let it sit there until an idea hits us. And a lot of things with us start and end with what's wrong with this idea. Maybe a good idea, and then you say, okay, what's wrong with it? And you scratch that. A great many things fall aside. When we looked at online gaming and actually gaming, and we, for better or for worse, right now it's very much for the better, but we kept looking at MGM. MGM in many, call it counts, for us was continually impressive. And as we stripped away, okay, what's wrong with this or others, it stood alone. Stood alone because of what we thought was its being vastly undervalued because of the pandemic, because of its management, when we learned about their management, because of their prospects, not only online, but in terms of their remarkable infrastructure, impossible to create anywhere in the world other than in Las Vegas, where, their footprint is just extraordinary. And as that analysis went on, we said, well, we're going to surprise ourselves here and take a direct interest. And we've done so. And I mean, it's more than doubled in value, but that, we're not like, it's not like we're not quick fixers and out. Not that we fixed it, but as people realized people were going to come back to Las Vegas and that online was growing. So, so far, everything we have learned has only increased our interest in the category and in the company. It's not like we'll repeat it though. So you meaning that you won't look to do similar types of investments in other types of companies? It's possible. Again, one of the things with us is ruling out stuff is really stupid. I mean, ruling out by category, by this, by that, just makes no sense for us. Well, and let's talk about Turo a little bit too, because that was somewhat unusual as well, in that you are you're the biggest shareholder in that company, but you don't really have control of it, and you typically like to have investments where you fully control it, or you have, I guess, more of a say. As I said, there is an exception to everything. Yeah. I don't know how many times, if we keep repeating these exceptions in the same thing with the same whatever, then we will the rule of exceptionalism will disappear from us on many counts. So the thing is, we thought that's a great idea. Peer-to-peer car sharing is a great idea. Of course, we did not know that what would happen is that the supply chain for cars, and because of the pandemic and because of this and because of the difficulties that the big rental companies had, that they'd start disposing of their fleets, and we were the only ones around who had inventory, and so the business skyrocketed during this period. But it's a great idea, And look, we'd own all of it if we could.
Okay. So where do you see it going? Like, do you think, because it reminds me of Airbnb very much in that kind of model. Do you see it at some point going public? Do you like where do you see it going?
Yes,
from
that's inevitable.
Like,
Given the structure of it, it will of course be a public company.
Yeah. Okay. Well, I also want to talk about something else that's been in the news recently regarding Match and Tinder. There's going to be a lawsuit in November about the Tinder executives are accusing IAC and Match of undervaluing Tinder. So I guess I just want to step back and ask.
Well, here's the thing. I'll interrupt this just to say this.
Oh, okay.
I've been involved in many, actually, thank God, very few lawsuits in my lifetime. So my ratio is probably lower than most who've been in business for a long time. This one on its base is really quite absurd. The quote of the undervalued the company. We didn't value the company. We had an agreement with some of the employees of Tinder that at certain dates or whatever, the company would be valued by others, and the employees would have the option as to whether they wanted to sell into that valuation. Mm-hmm. That's exactly what happened. Now, the unscrupulousness and shamelessness of the litigators, the lawyers in this, to bring a lawsuit and bring into it issues of sexual harassment, having, utterly, except for some, you talk about, QAnon craziness, the idea of relating a sexual harassment incident to a manipulation to undervalue the company and making a link between the two for purposes of, it seems inconceivable that anybody who looked at the facts would ever say, well, that really is that's a crackpot theory. Nevertheless, in today's world, with people working, working on litigation and participating, if they ever get anything out of it, contingencies, it happens. You can accuse anybody of anything. I do really find it. It just isn't. It is akin to many things that happen today, where facts don't seem to matter, but they will in the end. This is going on a long time, and it will come to trial soon, I hope. And I think it'll be quickly disposed of.
So you don't think this would be a risk to shareholders, and it should be like,
Well, look, shareholders have to make their own determinations. And we've, of course, stated all the facts as we've seen them. And people will make their judgments. But, companies say, always, in almost every case, it's without merit. This is not just pro forma. This is really, it's outrageous that it's gotten this far. Other things are probably more outrageous in the scheme of things that I'm not aware of. But I would be surprised at any result that did not affirm that we acted correctly in this instance, and it'll be done with it. I understand. Look, if people sold out, anything anybody participates in, where they own something or they have a right to something, and they sell it, and then that thing goes on to huge success, and they say, if I'd only had an interest in it now instead of when I decided, in the case of this, was a decision to sell my interest, God, look how much more I would have gotten. Okay, I understand that, but it's not the basis for anything other than complaining. Not really.
So let me kind of on match and this, I'm turning to actually competition and
Sure.
and really competition being big tech, and Match, I believe, testified recently that it spent like 500 million to Apple for its App Store.
Yep.
Epic is suing Apple right now. What are your views on, you know, Apple, Google? I mean, you do business with Google too. I mean,
Yeah.
so how
I've
do
been
you?
clear about all this. Is really simple. It's fair. They have a service. They have a store. Uh, in a sense, I don't even liken it more. I liken it more to uh, how you function with credit platforms like credit card companies, which charge, of course, for you to transact over their platform.
But you have a choice, though, right? You have a choice of credit card.
Well, you have a choice, but also their transaction fees are generally parallel, and they're probably in a couple of percent range at the most. I think paying 30% tribute for basically simply being, so to speak, listed in what is an app store, which in Apple and Google's case are duopolies, if not in Apple's case, a kind of closed system monopoly. I think that's nuts, and it will not stand. Now, whether it gets there through regulation or litigation, I don't know, but I would predict to you some years from today that people who use these systems will not be paying 20 or 30% or probably 15%. The fees will come down to what fee transactional. All it is a transactional fee for processing. That's it. That's what they do. And so I think they'll come within range of that. And I think the only thing that's prevented it, again, has been their market power.
Yeah, I mean, but let's talk about also, you know, the duopoly of Google and Facebook and their, you know, digital ad revenue. I mean, you have lines of your business that depend on ad revenue as well. I mean, how do you view them? They just seem to be gobbling up more and more of the
what has happened is that, listen, these companies, Apple and Google, I mean, there is nobody that does not use a search engine, and if you use a search engine, you're using Google search engine primarily, who doesn't marvel at over the years how fantastic it has gotten in being able to deliver you a result from a query. That's a great achievement, and all the revenue that they can derive from that and advertising is great. However, they are an absolute monopoly, and therefore, I do not believe it is either wise for them or wise for regulators to allow them to be in competition with their advertisers, i.e., placing their own products in front of the products that people advertise and pay them for. Seems to me very simple, very obvious. Again, within some years, I believe that will be corrected. The EU has been making movements to do that for some time now. The US regulators will. Market power and monopolies, I do not necessarily believe they should be, quote, broken up, but they have to be regulated. When you have market power, there has to be regulation. You can either self-regulate, that's rare, but if you don't do that, and these companies have not done that, monopolists tend to monopolize. And therefore, regulation is going to come without any question. It will come. I don't know if it's going to come this year or next year or the year after. Mm-hmm. It'll come either privately or through litigation.
So just kind of also on that theme, I mean, do you think Amazon, well, actually, what do you think of Amazon buying MGM Movie Studio?
Well, that's a different, then you're now moving into a whole other area of consolidation in the media business, which is, you know.
Yeah, well, I'm sort of moving that way. So but I wanted to frame it.
Animal. Yeah. And it's kind of obvious. I mean, Amazon, unlike every other player in streaming, in media, you know, if you go back historically, of course, the purpose of being in the media or entertainment business was you have a product, an entertainment or communications product or media product. And if people watch it, if people go to your movie theaters and sit in seats, you get paid for that. People who in the chain of that, but you get paid directly for the interest in that product, whatever that product is. Amazon is in a different business. Amazon's business is having people be members of Prime and buying lots of goods and services from Amazon, not necessarily watching Jack Ryan or any individual show or whatever. That's a byproduct. They've decided that one way, in addition to free shipping and all the other services they offer to get people interested in Amazon Prime, is to offer media. It's impossible, frankly, to compete with that if you are simply trying to say, I have my own little product, movie, television show, and you like it as a consumer, and you directly pay exactly what it is worth to you, et cetera, for getting that product. That's a hard thing to do with an entity that says, I don't really care much about that. I just care if you join Prime and buy more Amazon products. So it's quite unique. Now, them buying MGM, I don't think changes the landscape at all. The landscape, I've been very clear about this. I don't want to be bombastic about it or whatever. And it's the value of words that have no price tag on them. So, I mean, you can discount them completely and quickly. But I've felt for many years that Netflix, if you would call it who wins, Netflix won some time ago. Nobody will get up to their, I believe, their subscriber level. That doesn't mean that there aren't other services that are going to, streaming services that are going to be in a value in the streaming world. It just means that the momentum that Netflix has, I do not believe can be duplicated by anybody. Therefore, the other people in it have to really rationalize what they are getting for what they're giving up, meaning that they are having to spend huge amounts of money to attract direct consumers, which is what streaming is about. And in the end, how many subscribers do you have as against how much you are putting out for that exclusive relationship with consumers, i.e. direct relationship, as against how much you're giving up from not having sold, as media companies have done since time began, to everybody. That's an equation that in the next years, as people start to add up the costs and the subscriber counts and the revenues and all that, we'll come to some conclusions. And I think there will be, in that process, there's going to be a lot of, as I say, blood on the floor.
So that's interesting, kind of in relation to the recent news too, with Warner Brothers Discovery. I mean, do you think that they have, like, where do you think they're going to sit in the marketplace?
Well, I mean, you started again this thing of consolidation. AT&T decided, I think recklessly, because they had a perfectly lovely business that that Ma Bell gave them, and that metastasized into the cellular business from landline. A remarkably good business, and but with some competition. And they said, okay, their route was to get into media and unite media with whatever, and they bought DirecTV, and then they bought Time Warner and whatever, and of course it came to tears. And now they've sold one, or they've spun off Direct, and now they're combining Warner with Discovery. There's not much. I mean, look, Discovery, first of all, Discovery's management is wildly better able to manage assets than AT&T can
Yeah.
in this area. I don't think there's any question about that. And they are advantaged to a degree by combining the Discovery nonfiction with Time Warner's predominantly fiction, other than CNN. So it's kind of a decent industrial combination. It's tagged with an awful lot of baggage in terms of, in order to do so, they have to carry a lot of debt in order to make the transaction work for AT&T. But they ought to do, again, they ought to do okay, depending again upon how much they put down to spend on programming to compete for direct relationships with consumers as the cable bundle continues to devalue. It's okay.
Can I ask you, just jump in? We've got a bunch of questions, Barry, that have come from the audience. One of them is sort of related a little bit to media, traditional media, and sort of this. I'll give you the question, but we can think about it. It's a sort of corollary to what you just answered, which is, in the 1980s, you very much wanted to acquire CBS. Are you happy that that didn't work out?
Yes. I'm happy, like anything, and it's probably a great rationalization. I can rationalize, shortly before CBS, we bid for Paramount and lost it to Viacom, to Sumner Redstone. And it was really because I clutched at the end and didn't bid the higher price that bought the asset. And who knows what would have happened with the world had that happened? Who knows what would have happened with the world if we had gotten CBS? I know one thing that would have happened is I wouldn't be in charge. I might have a new career, but I would bid over a lot that I would not be running something called CBS or something called Paramount years later.
Right.
For a lot of reasons, because the one thing I got out of this was an absolute, for me, that a rule, an order to myself that I would never engage in anything where I did not have the ability to control my own destiny, meaning that I had the ability to vote at least enough of the shares that I could never be told one day, goodbye, or get in a disagreement that I couldn't prevail. Now, of course, nobody gave you the ability to succeed, but that was the rule for me that came out of that. So that it's a very simple answer for me, which is, thank God that didn't happen. Who knows what would have happened if it had happened? But I guarantee you one thing, I wouldn't be running that company probably several years later.
What would you do if someone said to you, Barry, look, Discovery has done this deal with Time Warner, Disney's going here, all these behemoths are getting together. Here we are, Viacom, CBS. What would you advise them to do, given this new environment of streaming?
Look, I am not a believer. Let me say it this way. Yes, scale has value. Of course it has value. If you have more scale, you don't need to hear the bromides from me that come out of that. But I don't think scale is the answer, particularly. I think the answer is, if I had CBS and Paramount, Viacom, whatever, I don't know, yes, CBS, whatever they're calling it, there's some very good assets there. I believe that if you manage those assets, which are producing content, and you do it well, you will have a good return. And that will offer you opportunities, challenges, etc. You do not need to buy anything or sell anything, or necessarily. I'm not saying you shouldn't do either, but the mantra that if in fact you must have giant scale. Yes, if you want to compete with Netflix, which I think is a fool's errand anyway, but if you want to compete with Netflix, yes, you have to have a lot of scale to do so. That's obvious. But can you do very well for yourself and for your shareholders if you simply have good ideas, execute them well, and there will be buyers, there will be audience for those things, absolutely. So I I think that the problem in a lot, look, so much of this always is in the dreams and spirits of, quote, bankers or side players who go and convince people of theories about what the future is going to hold. And the prime reason for their doing it is, of course, I'm not saying they're bereft of intellectual abilities, but their reason for doing it is to create fees for themselves. That's what they do for a living. I don't think necessarily you gain that much. I mean, if a good idea comes, you listen to it, but to struggle and be desperate and whatever, I mean, people have said, oh, Comcast, what is Comcast now going to do? Well, Comcast has, first of all, superb management and the best hedge that you could ever imagine. They have a media business, NBC Universal, that does really good things. And they have a tech business in cable and in broadband that is the balance to that. People say, oh, spin them off. I think that's silly. They're in a fantastic position. They've also decided on a streaming competitiveness that isn't that capital intensive. I think that's just pure smart. Now, people say they have to do so. I don't think they have to do anything.
No. You mentioned Netflix. There's a question that came along that says, how long can Netflix stay afloat in light of their debt burden? Are people getting annoyed at Netflix AI screens? I mean, they probably are, but that's
at Netflix what?
Question. At their Netflix AI screens. I don't know what that means, but
I don't know.
Just your view on Netflix. I mean, where do you
Netflix, unless they do something just remarkably stupid, just to declare them a winner and go home. Now, what will happen? Eventually, they will begin to rationalize. Right now, they're in the business of wildly competing for content. Wildly meaning spending whatever is, in their terms, necessary, which is a great deal, for the simple purpose of closing the game, meaning getting the most subscribers. They already have the most subscribers, and they'll keep getting them. They'll lose some, they'll get some. But so long as that momentum of theirs is so great and they have pricing power, and at a certain point, you will see their subscriber counts graphing with their production costs and getting in line, and they will end up having a very nice return for their investors.
Right. Yeah, that probably sounds right. What's your take on vaccine passports for travel?
Very much so. I think we have to have a passport. Everybody has to be vaccinated, and you have to have a passport. Some documentation that it works, that you've done that, and that is the key to putting your mask with others in a bonfire and burning them all and living free and open. But having people who say that all I can do is just say what I said. You have to be vaccinated. You have to have proof of it. And if you get that worldwide, then travel, everything will come from that.
Yeah. Quickly, what businesses are you incubating that you are most excited about? Is it care.com? What else?
One of them. Well, there are several, but Care is definitely one. Certainly Vimeo is one, which is now being spun out.
Yeah.
But there's always, there's several in the, we've gone through now, 4 cycles, I think, of having gone from a big number of companies to fewer companies to a very large company to a smaller company as we've spun things out and then generated new things that have built things back. That is the cycle of life for us. So there's always stuff cooking.
Yeah. What do you think the next thing will be that comes out?
I don't know, and I never will.
You can't tell us. Okay, I get it. Or it's just.
I couldn't. If I told you, you shouldn't count on it. It is not yet in evidence.
How has the pandemic changed? I mean, obviously, there's Expedia is like one thing, but I mean,
we can't know. We can't really know. This whole thing of work from home, we've really not had. We're still in the a subjective period of this and be for some time before we can get objective about this. We're just now coming out of it. We lived in a period for a year where you had to work from home. Technology was there to be taken and was advancing anyway, but got a super jolt. The lessons have been learned is that, yes, you can do productive work from home, but you always could. But it has been accelerated by the tools, technology tools that have become available. However, whether that's a good idea or a bad idea for companies to abandon their, let's call it, in-house environments, culture, et cetera, and processes, I think is very soon to tell. Our companies have come out with policies about hybrid relationships with our employees, our staff. But I've said, whatever we come out with is subject a year, 6 months, 2 years to change. I think we don't know. Once we have a year or two post-pandemic, we can then start to determine what are the most sensible courses for work. I'm absolutely not convinced that it is good to have a hybrid situation where, to me, saying 3 days at the office and 2 days at home seems like you're simply saying to people, well, it's now a 4-day weekend and a 3-day work week, or, verging towards that, although I'm exaggerating for effect. I don't know that that's a good system for us to have that's going to be productive. Particularly.
How have you done it at IAC? What will you be?
What we have done, well, at Expedia, we have hybrid, which is 3 days a week in the office, and we've chosen Tuesdays and Thursdays to be at least 2 of those 3 days because we want commonality. I think the whole thing has actually been thought of much in reverse. It has been thought of as employee-centric, when in fact, if you have environments, like at Expedia, we just finished, for our sins, building a campus for over $1 billion in Seattle for 12,000 employees, where the right or wrong, the thoughtfulness that went into that environment, into how it would benefit everybody by how you relate people to people and functions to functions and all of these kinds of things in an incredible atmosphere. The question is, how does that work? How does that hub now work for the future as an attraction of a place for people to go to do productive things? It's too early, and there's too much noise about, the pendulum swings, everybody should do things from home, et cetera, et cetera. Offices are dead. Real estate will go this way, and that's all hogwash right now.
Yeah. Before we get to a question about your tennis and your views on Broadway, as a question, kind of a slightly more serious one, which is about online dating can leave its users exposed to harm. How do you plan to protect them from many of the issues, including cyberbullying?
We do a lot. All I could say is, just if you're interested in that, go onto the match group sites. You will find, and really a lot of work has gone into being as protective as you can, without invading people's privacy beyond rationality. You're always going to have, in any situation that connects anything, you're going to have bad actors, and some things will happen. But technologically, and in terms of rules, and in terms of this and that, they are as protective as it is possible, I believe, to be. And by the way, over their life, there have been remarkably few incidents. But incidents will happen.
Sure. Okay, tennis. So have you gotten better at tennis? Actually, it said any better. I wonder if this is a friend of yours.
Well, here's the thing. I would say to whoever asked that question, their observations of me are rather minimal. I have not had a tennis racket in my hand since I was 22 years old, and I'm no longer that.
Oh, really? I was wondering that. Well, okay, then let's switch to Broadway. You mentioned it when you talked about
that racket I have had in my hand for the last several years.
How is it? I mean, what's your how you said New York is going to come back with a bang?
Oh, look, Broadway. You know it's a tiny arena, although it has a huge effect on downstream in terms of New York and businesses and road companies and all sorts of and artistry and all of that. Broadway has been more hit and damaged than any other activity, for sure. Now, stadiums, of course, have been hit, but found ways to still have their teams be productive or do whatever. But Broadway, no one has been able to perform for a solid year. Literally unable. And it's going to start in September. Actually, it starts earlier than September in a couple of instances. But the government supposedly is having a fund to help these shows get back on their feet, which to this day, everybody is waiting for these endless submissions to be approved for help. But it will come back. But the damage that has been done, the number of people who worked in the theater who no longer even live in New York because they couldn't afford to be here and have changed their lives and professions and all of that is pretty rough. And we have probably 3 shows coming back. Or we have Music Man with Hugh Jackman and Sutton Foster coming at the end of the year. We have other shows coming back, but it will, of course, but it has been really rough on everybody in the theater.
Yeah. Jen?
Well, I do have one last question for you, sort of in the vein of New York City. And it's something I'm curious about and wondered about for a long time. I mean, part of, I love the IAC building. It's also just, it's a great addition. I love it looks like a big cloud. Why did you choose to have IAC headquartered here in New York City? I mean, why not? It kind of has tech roots. Why not California? You have roots in California. Part of the reason,
first of all, I'm not a New Yorker by birth or by whatever, because I didn't come to New York until I was 23 years old. And ever since then, I've never actually lived here full time. I basically lived between here and California.
Yeah.
And then lots of other places. But the reason for IAC is, for me, and this is the thing of why I have confidence in, though certainly you could not get away from the damage that has been done to New York. I think, again, it's damage. But the reason for IAC being in New York is New York's the capital of the world. In the arts, in finance, in so many things. It's also the most stimulating city, I believe, in the world. And so if you have an enterprise like IAC's, which if it is not in a stimulating atmosphere, the flower wilts and new ones don't grow. That's why New York. That's why New York then, that's why New York now, and that's why I hope New York tomorrow.
Well, on that note, thank you very much, Barry, for all your thoughts. We've covered a lot here, but I having come back to New York for the first time in 2 or 3 months, it does feel alive. It feels like it's back, and I think it's a great feeling. Thank you again, everyone. This will be available as a podcast at Breaking Views soon, and you can, of course, see it on all your favorite social media sites. Have a great day, everybody.
Thank you. Well, thank you all.